welcome to Ester Industries Q2 and H1 FY20 Analyst and Investor Call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect was stated in the Concall invite sent to you earlier. We trust you have had a chance to go through the documents. I now request Mr. Singhania to make his opening remarks. Over to you, sir.
Thanks, Kevin, and thank you everyone for joining us on our earnings call. I have Pradeep Rustagi with me, our CFO as well. I will begin the discussions by highlighting the key operational developments, post which Pradeep will run you through the financial highlights. We have had a strong first half, as can be seen by the numbers. Revenue and profitability growth of 7 and 85% respectively. The growth has been largely driven by film business, which continues to perform well. Specialty polymer as well has performed well during the period, contributing to the overall growth momentum. Engineering plastic was going through a tough phase, reflective of the on-ground challenges grappling the auto and electric sector, the end user of the products. However, we expect the same to revive with time on the back of our consistent efforts and overall improvement in the economy and consumption sentiments. Let me now talk a bit about specific businesses. Recent performance and outlook for the same. Starting off with the specialty polymer business. As mentioned in our earlier calls, we expected the business to perform well during the quarter on the back of order visibility for some of our key products. The business has now had a string of successive quarters wherein the performance has been consistent. One of the major issues we had with the business was achieving the desired consistency, which given its nature of the business was and is not easy. The business is primarily innovation-driven, which does inherently involve certain elements of risk. Nonetheless, we believe the business is now attaining the stage and maturity level wherein we can achieve the revenue and earnings visibility for the near future. Majority of the first half performance was largely driven by strong demand for stain-resistant master batch MB03 product, which continues to see good traction in USA. We are maintaining a guidance of supplying 1,200 to 1,400 tons of MB03 for the year compared to the average of 300 to 400 tons in the previous years. In addition to the MB03 products, we are also witnessing encouraging response for our other products, that is innovative polybutylene terephthalate PBT, deep diable master batch MB07 and cationic diable master batch MB06. We expect good demand for these products as well, which would help maintain the momentum. Polybutylene terephthalate PBT, as many of you must be aware, finds applications across varied industries and products, automotive to consumer products, and from electronics to fibers. We expect FY20 to see volumes commensurate with the contractual level, post which it can grow meaningfully. We expect the specialty polymer business to perform well for the year on the back of the above-mentioned developments. Moving to film business, it continues to drive bulk of the company's overall revenue and profitability. We have seen a strong momentum in the business over the past few quarters, now primarily on the back of favorable demand-supply dynamics. The underlying demand continues to remain relatively steady, which would help us maintain the volume run rate. Realizations have remained more or less steady, with no material impact seen post the increased supply of 35,000 tons per annum hitting the market. We expect the realization to remain steady even after the commissioning of another 30,000 tons per annum likely to hit the market in Q4 or in Q4 of 2020. In addition to the favorable macro developments, internally as well, we are undertaking efforts towards improving the product mix by trying to improve the share of high-margin value-added products, which should help preserve the revenue and profitability momentum. We aim to increase the share of high-margin products to 30% by FY21 from present levels of about 20%. Offline quota will be commissioned in March or April of 2020, and this will enable us to enhance the volume of value-added and specialty products significantly. Lastly, as far as engineering plastics business is concerned, the same continues to remain under pressure, largely owing to the challenges grappling its end users, auto and electric sector. Demand remains benign, and with input prices remaining firm, margins continue to remain under pressure. We are nonetheless undertaking steps towards reviving the business by changing its product mix. We are hopeful that our efforts in conjunction with the overall improvement in the economy should help us in improving the business performance going ahead. In addition to the above, we are also undertaking several cost rationalization measures which will help us weed out unproductive expenses and line by approximately 4 to 6 crores per annum. To conclude, I would just like to state that we continue to remain positive on the business and expect better performance to continue over the coming years. While film business will continue to drive bulk of the near-term growth, we are extremely delighted with the way specialty polymer is shaping up. With strong product pipeline and improving order visibility, we expect specialty polymer to trigger the next growth phase for the company. With that, I hand over the floor to Pradeep, who will run you through the financial performance. Thank you.
Good afternoon, everyone, and thank you for taking the time out for our call. I trust that all of you have received the investor document circulated by us earlier. Let me quickly summarize the key financial highlights for the quarter and half year, following which we can begin the Q&A session. Starting with the top line, revenues from operations for the quarter stood at rupees 254 crore, while on a half-yearly basis, the same stood at rupees 538 crores. Bulk of the revenues was driven by film and specialty polymer business. Indian plastic business, as mentioned by Mr. Singhania earlier, continued to remain under duress owing to the weak demand in the end-user segment. EBITDA for the quarter stood at rupees 46 crores for the quarter as against rupees 27 crores reported during Q2 FY19, higher by 71%. While on a half-yearly basis, the same stood at rupees 100 crores as against rupees 54 crores reported during H1 FY19, by 85%. Higher profitability was owing to the better product mix and our cost rationalization measures. Finance cost for the quarter stood at rupees 7 crore as against interest outgo of rupees 9 crore during Q2 FY19. While on a half-yearly basis, the same stood at rupees 14 crores compared to rupees 18 crore reported during H1 FY19. As on September 19, our outstanding interest-bearing term debt stood at rupees 73 crores, while interest-bearing working capital liabilities stood at rupees 86 crores. Interest-bearing debt as a multiple of annualized EBITDA stood at a healthy level of 0.8x as of 30th September 19 in comparison to 2.67x as at 30th September 18 and 0.95x as at 30th June 19. Depreciation for the quarter stood at rupees 9 crores as against rupees 8 crores for Q2 FY19, while on a half-yearly basis, the same stood at rupees 17 crores as against rupees 16 reported during H1 FY19. Profit after tax for the quarter grew by 164% to rupees 19 crore as against profit of rupees 7 crore generated during Q2 FY19. While on a half-yearly basis, profitability grew by 194% to rupees 43 crores. Higher profitability, while was largely on back of positive performance of film and specialty polymer business, our cost rationalization measures as well have started contributing towards the bottom line. As indicated by Mr. Singhani earlier, we expect annual savings of around rupees 4 to rupees 6 crores on the back. To conclude, we believe that we are well placed to create significant value for our shareholders on the back of steady momentum in the film business. The specialty polymers business as well has started to perform consistently in recent times, and with better order visibility, we expect the business to deliver the expected returns. Lastly, while Indian plastic business goes through a challenging time at present, we believe that it's temporary in nature and expect the business to revive going forward. That concludes my opening remarks. We would be happy to answer your questions now.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Santalia from AK Securities. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, what is the current spread in the BOPET?
Current what?
Spread.
In the
sell price minus raw material cost.
Okay, valuation. Pradeep, will you please give the number?
Yeah. The September quarter, we were operating at about 41 rupees, and currently it is in the range of 50 rupees. And 12 micron corona commodity.
has increased by 9 rupees.
The currently, October was lower, but the current prices are better than the October, and it is better than the September quarter presently.
I will clarify that a little bit more. In June quarter, we were at about 50 rupees. Correct me if I'm wrong, Pradeep.
Yes, sir, 51,
51 rupees. In September quarter, it was 41 rupees. And now we are back to about 51 rupees.
Sir, whether it is sustainable or some new capacities are coming up, so whether it will go down from here onwards?
Well, one line of Jindal has already started up in early August, and it had minor impact as can be seen. The spread dropped from 51 to 41 rupees in September quarter, and this line is now in production. And the next line of Surat Metallics is expected to start up in Q4 2020, and there may be some minor price adjustments at that time, but largely we don't see any major issues.
Don't see any major. And sir, what about the specialty polymer, sir? What is the current contribution in the turnover?
Pradeep, will you give the numbers, please?
Yeah, sir, just a minute, sir. So this quarter, turnover of 19 crore in specialty polymer out of 254 crore. So it's close to 8% as of now.
Turnover?
Yeah, rupees crores, 19 crores in September quarter out of total turnover of 254 for the quarter.
What was going forward, sir, after 2 years, in the next 2 years, how much we can expect from here?
So in the current year, we have in the first half, we have achieved a turnover of about 35 crores, and we expect similar numbers in the second half. So this year we should be ending between in the ballpark of 70 crores for specialty polymer, and next year it should be definitely better than 70 crores.
Better than 70 crores. And the EBITDA margin is around 20% in this business.
No, it is higher than that.
EBIT margin for the business is about 30% plus.
30% plus.
Yeah.
Okay, sir. Thanks a lot.
Thank you. The next question is on the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you for the opportunity, sir. So just to clarify, to the previous question that was asked, you said EBIT margin is 30% or EBITDA margin?
So for the business, we do segmental results as required by the accounting standard, which asks us to calculate EBIT, earning before interest and tax, without loading of unallocable expenses. So that is about 30% plus, especially polymer business as of now.
Okay. And sir, how much capex are we expecting over the next 2 to 3 years in the 3 divisions that we have? Any ballpark number? I know it's too early for, let's say, next year or year after, but ballpark, what you have in mind? What kind of capacity expansion?
We have no capacity expansion going on. We have about 65 crore of capex going on, which are minor debottlenecking exercises, etc., plus normal capexes that the company goes through. About 65 crores are currently in ongoing.
Okay, and nothing major going forward, right, for the next, let's say, 2 years?
Right now, we have not finalized anything else.
So, sir,
now we have not finalized anything else.
Great. So, what's your capacity utilization like in the 3 products?
In film business, it is, we used to have a nameplate capacity of 57,000 tons. We are actually doing more than 57,000 tons. We're doing nearly 60,000 tons per year.
Okay.
And in specialty polymer business, the capacity utilization number is actually not very meaningful because the capacities were not created specially for specialty polymer. They were old batch lines which were used for making film grade chips. So that is really not meaningful number. And in the EP business, Pradeep, can you give a number for the EP?
It is in the range of 60 to 65%.
Okay. And sir, in specialty, you said that it doesn't make sense to talk about capacity utilization, but you have enough room to manage for the next 2 years, right?
We
have enough room to manage on base polymer. And we may need to do some debottlenecking for different kind of products. But for base polymer, we have enough capacity.
Right. And sir, final question: is there any seasonality in the business? Should we be looking at quarterly numbers or quarter-on-quarter numbers? So if I look at the quarter-on-quarter numbers, there is a slight decline. So is that because of the current economic environment you are seeing some sort of a slowdown? Or this generally happens in September? How do I look at quarter-on-quarter?
No. There is no seasonality in our business like carbonated soft drinks. Summer mein zyada bikta hai, winter mein kam bikta hai. We don't have any seasonality. We have no seasonality. Basically, the reduction in the turnover is because the raw material prices came down substantially. And we have a pass-through model for raw material. So, and Pradeep can give you the exact number for raw material in June compared to September.
Okay. Yes, sir. So the prices
of raw material reduced.
Yeah, sir. I'll give the PT and MEG numbers put together for per kg of film. In June quarter, it was 69 rupees, which dropped to in the September quarter, which dropped to 62 rupees. So there was a 7 rupee drop in the PT and MEG prices per kg of film. And as Mr. Singhania told, it's a pass-through model, so there was a corresponding reduction in the selling price also of the film. So we have improved on the quantity front, but value front there has been a downturn because of the reduction in the feed stock prices.
I mean, if we take 15,000 tons, approximate 15,000 ton production per quarter, at 7 rupees, you're talking about 100 crore reduction only because of raw material price. If the prices of raw material had remained, June quarter, the turnover would.
Got it.
10 crore, sorry, 10 crore. 10 crore, sorry.
So this 10 crores is you're saying with respect to revenue or with respect to gross profit?
This is revenue.
On revenue, okay. And the gross.
And also the margin also reduced by about 10 rupees. So from 51 it came to 41.
To 41.
So all in all, the revenue would have been higher by 17 rupees a kilo.
Correct. I got it.
Volume of 15. Yeah. So you can do the math. I mean, it's like it would be like the top line would have been higher by more than 20 crores.
Right. And the variation because of 51 falling to 41 would reverse now because you are seeing better spreads. Yeah.
So we've had a price in October. It was still at about 41 rupees, and now in November it is increased back to 50 plus.
Great. Thank you, sir. I'll go back in queue. I have other questions, but I'll go back in queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, thank you for the opportunity, and sir, congratulations on a very strong repeated set of good numbers. Sir, firstly, sir, is this the paradigm shift in the quality of numbers that we can expect now on a sustainable basis? Has the pitch is now ready for where we can, for going the unseen environment, we can report these set of numbers on a sustainable basis? How confident are you?
We are confident of giving good set of numbers going forward, and especially in our specialty polymer business, which is not cyclical by nature at all. It has taken a long time, but we see we have better visibility going forward. So, like Pradeep said, that we will be doing about 70 odd crore turnover. We expect to do about 70 crore turnover in FY20. We expect a significant improvement in FY21.
But sir, the backbone will be the film segment only. The major of the turnover, major EBITDA, everything is coming from the film. So you should be. Your outlook is definitely skewed for a better revenue from the specialty polymer.
So even film business going forward is looking good to us because we have already had new line start up in August. it had a little bit of an impact, as I mentioned in the June quarter call, that there may be some impact, and it was not a very substantial impact, and it has now reverted back. And going forward, even after the next line starts up in Q4 FY20, there may be some marginal impact, but overall we see the film business doing well going forward.
Sir, how is the position globally, sir? This is what domestic has been. So how are films companies globally doing, and what are the capacity additions that may happen going forward? Any idea, any understanding you want to share?
Yeah. So as far as the global business is concerned of polyester film, there is a global demand growth of about 5 to 6% on a global basis, which is a very good number if you take it as a global perspective. And there are new capacities starting up in the global markets. There is a line of Polyflex starting up in Indonesia in the next month or so. Then there is a line of SRS starting up in Hungary. And there is a line of Flex starting up in Poland. So we know 3 expansions which are starting up.
What is our domestic market share, sir, in the polyester film?
It's about 9%.
Between 8 to 9%.
8 to 9%, and the largest player being Jindal having a market share of?
Jindal's market share will be about 15%.
15%. Individually, it is the largest player, Jindal?
Yes.
Or
Sorry?
Jindal will be the largest player domestically?
Yeah. Correct. Yes.
Okay. And so now coming to the duty structure part, sir, how does duty benefits are there, whether these films can be imported or any protection being provided?
There is a 10% custom duty on import of film.
There is a 10% duty.
10% custom duty on import of film.
Import is not viable today. Let me put it this way, imports are just not viable, even at these prices.
Okay. And Pradeepji, you were telling about the raw material basket. I missed that part. If you could give separately, how have PTA and MEG prices moved, sir, for this last quarter?
Yeah, so
prices have come down by about 7 rupees a kg over June quarter.
Is asking for mix and MEG separately, sir?
Separate, yeah. If you have the mix separately, sir, it would be very much more helpful.
June quarter PTA average was 63 rupees, which reduced to 56 rupees in September, and currently is in the range of 53 rupees, 52 to 53 rupees. MEG in June quarter was 44 rupees, which reduced to 42 in September, and currently in the range of 44.
Okay, and the mix, sir, for 1 kg, what is the proportion for PTA?
You need 0.86 of PTA and 0.34 of MEG. And that's how you arrive at the per kg cost of PTA MEG per kg of film.
Right, sir. Sir, if I come to your balance sheet, sir, it now looks much healthier. You have been, as per the cash flow, a lot of repayment has taken place. So could you clarify, what are these other financial liabilities and the other non-financial current liabilities under the liability section?
We have provision, etc. You have trade payables. So these are normal creditors. There are no, sort of major amount payable. These are all current in nature in the normal course of the business, related to expense provisions, related to services provisions, freight, etc., and the material supplied. That all comes in the trade payable.
Okay, and the other non-current liabilities of 27 crore, 26.5 crore?
Long term, like there are security deposits received from few, and what happens that when you go for an actuary valuation, so there are 2 portions. Actuary certificate, there is a current portion and there is a non-current portion. So as per the certificate, non-current portion is disclosed separately and current portion is disclosed separately. So these are liabilities which will continue as this will continue as it is.
So looking at
increases and decreases.
Didn't get you, sir. Last point.
No major increase or reduction is envisaged in these liabilities. This will remain on a business as usual basis.
Okay, sir. So now coming to your statement, sir, you told you are in the process of creating shareholders value. So if you could elaborate more? What steps are you contemplating to create? Because market is definitely looking at the quality of the numbers on a sustainable basis. If you look at today your EBITDA of 100 crore, if I'm not wrong, the market capitalization is around 300 crore. With promoter stake, I think so comfortably above 50%. So, what message are you? What steps are you going to take to create that value going forward? If you could articulate more on the same, and then one more question, and I'm back in the queue.
Okay, so I'll answer that. We are going to create stakeholder and shareholder value by having a sustainable, profitable growth going forward. If you will notice, our debt has come down from a level of 290 crores as of March 2018 to a level of 158 crores. This is a reduction of more than 45% in a period of 18 months. So our leveraging will be very at prudent levels. We are going to try to continuously increase profitability on a sustainable basis, and focus will be on the specialty polymer business to grow that aggressively, because the margins and the returns on the specialty polymer businesses is very good, and we see a good visibility of that segment doing well in the coming quarters and years. As far as the film business is concerned, we see that the market is supporting us right now. As far as demand and supply is concerned, we see that continuing going ahead. Plus, we are going to improve the profitability of the film business by going more and more into value-added products. Our new offline quota is going to start sometime in January, February, and that is going to help us increase the value-added product portfolio substantially from level of 19-20% to about 25-26% and take us closer to a target of 30%, which we hope to achieve by FY21 or in middle of FY22. So going forward, we are going to continuously try to improve our profitability and margins and take up an expansion at the appropriate time when we see that we are in a position to do that without taking on too much debt.
So lastly, on the dividend payout policy, sir, now with better cash flow, better visibility of earnings, what should investors look forward in terms of we have done an EPS of 5 rupees for the first half, and our last year EPS was 3.75. So if we can annualize it with minor exaggerations up and down, what should investors look for the dividend payout? If you could guide us.
We don't have a written down dividend policy. The board takes a view. The only statement that I will make here is that we like to, as a company, we like to share prosperity with our shareholders.
Right, sir. And for for you as the chairman and the MD, director remuneration are fixed, sir, or there is a variable component depending upon the profitability?
Yes, there is a commission which by law we are allowed to take, and the board decides the level of commission that can be paid to the full-time directors.
What was it last year, sir?
The last year,
as a percentage of profit.
Last year it was 10% of the profit as calculated under Section 198 of the Companies Act, which was rupees last year.
So last point I missed again. I'm on a bad line.
It was 6 crores last year. 1890 it was 6 crore payable to the whole-time directors. 6
crore was paid to the whole-time directors. And what was the dividend payout, sir, last year?
10%.
10%. In absolute terms, sir?
The absolute terms, including, so it was 4.2 crores, and then there was dividend distribution tax on that.
So 5 crore for the shareholder community and 6 crore for the whole-time directors. That is what precisely it is. Correct, sir. Thank you, sir.
Thank you. The next question is from the line of Lakshman Modi, an individual investor. Please go ahead.
Good afternoon, sir. Sir, just I wanted your opinion about this income tax amendment which has taken place recently. Although you have given in the note that you are looking into it, but how much benefit we will derive out of that?
Pradeep, please answer that.
Pardon, I couldn't get it properly.
That regarding that income tax, the changes which has taken place recently, what benefits the company will derive out of that?
Yeah. So we have, as after the notification, then there was a clarification issued by the CBDT 15 days or 20 days later, saying that any company which is opting for a lower rate of tax will need to forego of the MAT credit that is available in its books. So since we already have a 18 crore rupees on 31st March 19 sitting as a MAT credit in our books, we have decided not to take advantage of the lower rate of tax in the current financial year. So once we exhaust the MAT credit, which would be exhausted latest by March 21, then we will go for a lower rate of tax option. So for 2 years we will continue with the existing tax regime, and our payouts will be lower than the lower rate of tax because we would be required to pay only MAT.
Okay.
We would not, because the earlier MAT credit available will be adjusted toward discharging the tax liability.
Very correct. Right. It is clear now, sir. Thank you.
Yeah.
Thank you. The next question is on the line of Agastya Dubey from CAO Capital. Please go ahead.
Thank you for the follow-up, sir. Sir, you mentioned total debt number which I missed. I can see 165 crores on the balance sheet under borrowing. So what's the current maturity of borrowings, long-term debt?
The current maturity for 19-20 was 23 crores, out of which 11 crore has been already paid as per the schedule by 30th September.
So this remaining 12 odd crores will be in the other non-current liabilities, right?
Pardon?
This remaining 12 crores will be part of other non-current liabilities on the balance sheet, right?
No, the amount payable in the next 12 months is classified as current portion, and the amount payable beyond 12 months is classified as non-current asset, non-current liability.
एक वो रहता है ना सर, एक line item रहता है in the other non-current liabilities, which is current maturity of long-term debt.
Yeah, so current maturity of long-term debt, I telling you, it is 23 crores for the financial year 19-20, out of which 11 crore has already been paid till 30th September.
So total debt कितना हुआ सर, long-term, short-term plus current maturity?
Total debt 73 crores include the current portion also. 30th September, the total term debt is 73 crores, which includes the current portion of liability also.
And what is that number today, the total number including working capital?
In working capital is put together is 86 crore interest bearing. Total interest bearing term debt and working capital is 159 crores.
150. Oh, okay, 150. Okay. Sir, on the working capital side, can we expect any reduction in working capital days, or this number is optimal, what you have today?
You're talking of the level of inventory debtors, etc., in terms of working capital cycle?
Yes, correct. Working capital cycle, whatever number of days we have, is that level optimal, or can we expect certain improvement or probably some deterioration?
Yeah, we constantly work on these numbers. We have a close watch on these numbers, the inventory levels, the debtor levels, and it is there under our focus, and we continuously make attempts and efforts to reduce the cycle time.
Okay, so you are satisfied with what you have today. Sir,
what we have reduction in these. What we have today is very satisfactory, but we continue to try to improve upon it all the time.
Great. Sir, if I go to the results for this quarter, right, and you have 48 crores of EBIT from the polyester chips and film business, right? So the specialty part is also there. So how much is the specialty portion of that?
Yeah, so out of 48 crore, 41 crore is from chips and film, and 7 crore is from specialty polymer business.
Okay, and sir, can you give the same number for Q1 and the Q2 of last year?
Yeah, so June 19 quarter, film was close to 50 crores, and specialty polymer was 6 crores.
Okay.
And September
last year?
18, pardon?
Yes, sir. And last year, September 18?
September 18, specialty polymer was 3 crores and film was 25 crores.
Okay, perfect. And sir, final question. So you mentioned that the BOPET market seems pretty good to you, and there are few lines coming in, but you think that it can be easily absorbed. What about certain substitutes? I was on a call yesterday with one of your competitors, so not strictly a competitor, but they also do certain films. So they were saying that their margins expect some certain amount of compression. Their gross margins were somewhere close to 30 rupees a kg for a variety of products. So they were saying something slightly different than what you're saying. So on the spreads, can you elaborate a bit more on the substitutes also? Is there any way imports you have ruled out because they are not viable, but other than that, is there anywhere where you can see some pressure?
No. Let me answer that question. If you are talking about polypropylene film, the market is clearly segmented.
Yes.
The market is very clearly segmented between polypropylene and polyester because of the inherent properties that both the products give. Polypropylene gives a better water vapor barrier and polyester gives a better oxygen barrier or gas barrier. So the market is very segmented and there is very, very marginal overlap between the two products. So there is really no competition from polypropylene as far as polyester is concerned.
Great.
And the dynamics and the dynamics of both the businesses are completely different. So one cannot be compared to the other. Hello?
Sorry.
Yeah. I hope that answers your question. Hello?
Thank you. Sir, the line for the current participant has dropped off. We'll move on to the next question. That is on the line of Aman Santalia from AK Securities. Please go ahead.
My question is that the balance sheet of the company is very light right now. And though there is no major CapEx plan, so the company is coming out with some dividend policy for the shareholders.
We don't have a written down dividend policy, but the board takes a view depending on the performance of the company and the performance going forward. The board takes a view of the dividend distribution. And this is what we're going to do again at the end of this year.
Is there any major CapEx plan for the next 2-3 years?
As of now, I just mentioned that we have ongoing CapEx of about 65 crores. And the next year's CapEx, there is no major capacity expansion plan if you're talking about polyester film or anything.
So this CapEx is for which plant, sir?
These are all small debottlenecking CapExes plus normal CapEx that we have every year.
And offline quarter for film business.
Pardon?
Offline quarter for film business, which is about 15-20 crores.
Okay, sir. Okay. Thanks a lot.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. To be very brief, sir, how much power and fuel constitute as our expenses, sir?
Of power and fuel, which includes power, steam and heat, is close to 6 crore rupees a month.
6 crore. For this quarter it is around 18 crore.
Yeah.
6 crore, 18 to 19 crore per quarter.
And that is being debited in the other expenses.
Yeah, it is part of the results are declared as per the format provided by the stock SEBI.
Sir, as we see the turnover in this polyester chip was 217, that moved up to 218, but margins have moved up more. What factors did actually played up that resulted in this substantial shift? Our spread has improved. What has been there? And what was the tonnage for September 18 and tonnage for September 19?
I'll first give the tonnage for film business. The film in September quarter was 15,065 tons, and June quarter it was 14,500 tons. So there is an increase of about 500 tons of the film sales quantity. And chip sales quantity in June quarter was 3,400, which reduced to 2,500 in September quarter. So So that's the sales part. What is the other question that you have? Hello. The results have improved in the film segment because of the increase in the value addition. And the specialty polymer is also part of this segment. So there is an improvement in specialty polymer. There is an improvement in film business. As a result, the EBIT from this segment has increased. Are you with us? Hello?
Sir,
I think you dropped off.
Yes, sir. We'll move on to the next participant. That is on the line of Gulshan Patni, an individual investor. Please go ahead.
I have one question. What is your capex plan for the second half?
Payback time for the what?
For second half.
Second half of this financial year, we would spend the 30 to 35 crores.
And this is largely maintenance capex.
No, there are two major machines that we are installing. One is extruder and one is offline coater, as Mr. Singhania told in his opening remarks.
Okay, but this is largely maintenance or is for growth?
Offline coater is for value-added products.
Sorry?
This is for value-added products.
Oh, it's for value-added products. Okay. Thank you.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Sorry, sir, I got dropped. You were saying something about segmentations in the market.
So what has happened, you were talking about, the question is to Mr. Singhania about the segmentation of polypropylene and polyester. Sir, you need to answer it.
Yeah. So I was mentioning that the markets, the applications for polyester and polypropylene are clearly segmented. There is very little overlap between the two products, and there is no competition per se from polypropylene as far as polyester is concerned.
So this single-use plastic ban, is there any way any effect can come to you? I mean, how are you guys placed? How are polyester films placed?
I don't see any threat on the single-use plastic because we are not. It's a question of definition. We are not the classical single-use plastic like a fork, spoon, plate, knife, straws, etc. Because those are the final products. Our product is used in the manufacture of food products or packaging. So it's part of the process. And multi-layer plastics are fully recyclable. So there is no threat as far as polyester film is concerned going forward. And we have also proven this. There is technology available to recycle multi-layer plastics and make injection molded components.
Hello. The next question is on the line of Rakesh Kapoor from Kapoor Company. Please go ahead.
Yes, sir. This is Rakesh here. Sir, I was dropped when you asked me. Sir, give me the mix for specialty film for the first half versus last year first half, sir.
So, the percentage, as we told you, that it is in the ballpark of 20% proportion of the film is through value-added and specialty products.
You mean to say the metallurgical film? That is what?
No. Not metallized, but there are other films also. Metallized could be one of the specialty films, but there are other films also.
No, Pradeep, that's wrong. Metallized film is not part of the value-added product.
Certain grades of metallized film.
No. Value-added products do not include the plain metallized film.
Okay. So can you clarify more, sir? I'm not getting it.
Okay. Value-added products, right now we're doing about 20% of the total volume of polyester film. They do not include the plain metallized film.
Okay. But the metallized film itself in its form have the higher margin than the pure film.
Yes.
Okay, what is the difference, sir? Gap कितना per kg?
It's very difficult because we have so many products in value-added products.
Okay. And then how this value-added mix is going to change, sir? Today it is 20% out of your total capacity. What are we envisaging for the next half with remaining 20%, and what should be the ideal figure for the next year?
Okay, so I just mentioned that earlier. We are at 20% right now. Our offline quota is starting up by by March, and that will take our total value-added product portfolio from 20 to about 25-26%, and our target is to reach 30%.
You were telling what we are starting a new new site. I didn't miss the word. What is starting?
Offline coating machine.
Offline coating machine. Okay.
Yeah, that is starting up by February or March.
Achha. So that will add to the margin itself.
Sorry?
That will be a margin addition going forward.
Yeah, that will give us a margin addition.
Okay. Sir, in earlier 2-3 calls you did spoke about some rationalization of your office spaces also. Has that all been done and the effect been seen in the P&L?
No. That is not. We are trying to do that, but it's not happened as yet. The real estate market is not very good.
Okay. So we were trying to dispose of the office and move to some other place. That was
correct.
What was the? Okay. So we are still continuing with the previous property.
The effort is going on.
Correct. Okay, sir. Thank you. Fine answer thank you for all the candid answers.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you everyone for joining Ester's Q2 earnings call, and I look forward to talking to all of you after the next quarter. Thank you very much.